Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how can you know or predict stock price in the future? Answer by Prashant Angani. If anyone could predict future stock price even for a single time, they would already be the richest man on the planet. They could simply borrow a lot of money at risk-free rate, say 812%, and leverage it even more, using options to make the trade. Fact is, no one can even predict what they will be doing tomorrow at the same time. The best one can do is an educated guess with a certain probability based on the amount of control they have on their own actions. Now, extrapolate that to be able to predict what millions of investors and traders would be feeling about a stock or the overall market sentiment at a future point in time. Now add extraneous factors like North Korea, Trump/Brexit, demonetization, and you have a picture of how impossible it is to predict any stock's price. If anyone tells you they can predict, they are either a fraud, or have insider information, which will send you to jail. The best alternative you have as an investor is to look at past history of a well-diversified basket of stocks and try to extrapolate that into the future based on market events. Diversification reduces overall risk on your portfolio and provides less volatility, which helps you take stop losses in case the market turns against your views. Here's a sample portfolio of top number 10 Nifty 50 stocks to illustrate the importance of diversification. This portfolio returned plus 81% at a risk of minus 13% in the last 20 months. i.e., if you had invested Rs 9,350/ on January 1, 2016, your portfolio would have reached Rs 16,632/ by September 10, 2017. The Portfolio Optimizer is a very powerful tool which can help you identify other such portfolios which fit your risk-reward profile, but will certainly not try to predict the future. Smile. Answer by Jotak Nandwana. Nobody can predict how much a stock would be worth in future. That's because stock markets are made up of millions of participants whose market trades create supply and demand for stocks, which in turn affect stock prices. So, to predict future stock prices, one has to know what other market participants are up to. How many shares are they going to buy/sell and at what prices? Now, that's impossible. That being said, one can surely estimate if price is going to rise in future. I will repost my answer to a similar question answered earlier. How do I know if the stock price is expected to rise in the future? First, let's try to understand why do stocks go up? While there are multiple factors that fuel stock prices, the primary reason behind a stock moving higher is earnings growth. Let's quickly look at the relation between the earnings growth and stock price appreciation of Eicher Motors, a well-known multi-bagger in the Indian market. The stock price performance has more or less mimicked the earnings growth over a long period. However, there are times when fundamentally strong stocks take a breather after a huge price gain. This is the period when such stocks go out of favor and hence their prices remain sideways or witness mild correction. This is where supply and demand comes in. The demand for such stocks fizzles and there is a lot of supply in the market, which sends the stock in a sideways mode. On the other hand, the demand for a stock rises when there is a positive earnings surprise or the market anticipates solid earnings in future. This creates a huge demand for the stock, which sends the stock price higher. Another important factor is the general market direction. 3 out of 4 stocks move in sync with market sentiment. Stocks go up during market uptrends and fall lower or remain sideways during downtrends. One can expect stock prices to rise in the future if the above 3 factors are in favor of the stock. I will try to explain the above with the help of a few examples. Edelweiss Financial Services. Edelweiss Financial Services is one of India's leading diversified financial services company, with interests in credit, financial markets and asset management, life insurance and commodities. The company had posted revenue growth of 37%, 40% and 26% and net profit growth of 21%, 28% and 38% in Q2, Q3 and Q4 FY 2016, respectively. On the back of strong earnings profile, the stock witnessed huge buying interest as it broke out of a cup-base pattern in mid-May 2016, giving investors an entry point at 62. The stock has been in an uptrend since then and is worth 278 as of September 19, 2017. That is almost 350% return or a 4.5 bagger in a period of 16 months. Heritage Foods. Heritage Foods is a fast-growing milk and milk products player in the Indian dairy market. The company is one of the few players in India that offers farm-to-fork solutions in the dairy and retail segments. The stock had given an early entry point to investors, as it broke out of a 5-week-long tight area into new high ground in late November 2015. Prior to the breakout, Heritage Foods had posted decent sales growth of 24%, 14% and 15% in the preceding 3 quarters. What was even better was the earnings acceleration it had delivered during the same period. Profit after tax expanded 82%, 102% and 216% in the 3 quarters just before the stock broke above its resistance of 509 Indian rupees in November 2015. Since then, the stock has advanced till to 190% in a period of 22 months. While these are just a couple of examples, there are many similar cases where stock price increases have come on the back of below 3 factors. Strong earnings growth, the primary reason behind stock price increases. Huge demand for the stock resulting in a technical breakout from a common chart pattern such as cup with handle, double bottom or flat base. A favorable market direction because 3 out of 4 stocks follow the general market condition. To check for Indian stocks meeting the above criteria, I suggest you guys use Market Smith India tool. The tool helps users to identify quality stocks that are poised to make huge price advances based on the CanSlim investment method. Related, what is CanSlim investment method? For more answers on investing in the Indian stock market, connect with me on Quora. Happy investing. Answer by Warren Gold. You can't know the stock price in the future. You can predict the stock price in the future, and frankly anyone who buys or sells stocks does exactly that, even though they may not think about it or realize it. The real question is how accurately can you predict a future price, and a likely time frame for that price. Accurate predicting can absolutely be done a high percentage of the time, but certainly not perfectly. Stock prices are also dynamic, so predictions are always updated and modified based on a constant flow of new data. By using price action and time cycles, one can project price moves up and down, and over specific time periods. I do this daily in swing trading the futures and futures options markets. These are 100% objective projections, only using the price and time data, and these can be equally applied to stocks or any other freely traded markets. My projections certainly aren't 100% accurate, but they give me a very viable trading model that has stood the test of time, 31 years in futures and options. This trading model has the added benefits of a built-in exit strategy both for winning and losing trades, as well as an extremely robust risk management strategy.